How's it going, guys? This is Forensic Forex Expediente, and I'm back with another video. This is your daily update on US dollar versus Swiss franc. As you can see, this month finished down, and we were expecting, or at least I was expecting, a month that finished up. However, things may not always come to fruition the way you want it to, so my speculation was wrong, and I'm not afraid of getting it wrong publicly. It's still a learning experience because all traders don't get it wrong, and it's okay to be wrong because you overcome, you persevere, and you'll get it right eventually. We can see just in hindsight now, right? Now that this month has finally fully come to an end, we can see that price moved above into a premium here and then sold off. So you can see those ideal sell conditions for that monthly candle is going to more than likely form above July's opening price. You can see there's some type of swing high formation that formed above this opening price. So right there is where the commercials were most likely their max net short. And as price continued to break down, we spoke about how it broke a swing low. There was a SIBI here. This was going to be a hurdle for price to get above, and price actually continued that continuation lower. It gave us a lower swing high and continued to sell off, taking out swing lows, filling back in inefficiencies, and taking out that IPTA 20-day low here. Not that there's any magic between the IPTA levels. It's just like significant levels that may be rated long term or in the near future will be the draw on the higher time frame. And you can see clearly the draw was to that 20-day low here. Now, if we take a look at the DXY, we had similar price action, right? Price creating a swing high formation. There goes that swing high. That's above the monthly opening price here. And then breaking down, price broke a swing low, which counts as bearish momentum or potentially a false break to get traders to go short. But you can see it continues that idea by printing a lower swing high here. 1, 2, 3. That is more confidence or confirmation that price action is more than likely going to produce that another leg down. And it did after getting that third bar here. You can see price creates this large tear off with this SIBI and price sold off, taking out what? That 20-day low, that old 40-day low, tapping back into that old 60-day low as well, rating that sell side there. After rating that, you can see price pull back and consolidate. Right now, currently in recent time, we might have a trend to go back bullish for the DXY, but I spoke with the paid group. I told them that there's something that might be different with the bond yields going on. Right now, we have the 2-year and the 5-year failing to make a lower low or breaking a swing low, while the 10-year and the 30-year, and I'll show you guys just so we have some clarification, not breaking those lows. So come down to the 2-year. You can see how price is clearly bearish. These are old annotations on the chart, but it's still playing out. You can see how price had ran this swing low recently. That's the most recent swing low. Price ran out here. Go down to the 5-year, same thing. Most recent swing low ran out right there. Now, when you come down to the 10-year, you see the 10-year just isn't there yet. May get there, but right now it looks like it's probably being held up by the market makers. And we'll see. See, 30-year as well did not get down to that recent swing low as well. So there might be signs that there might be strength going back into the dollar. We do have the Fed's interest rate decision, I believe, on Wednesday. I don't believe they're going to be cutting or hiking or doing anything. So I think investors will go back to the dollar. Inevitably, I think all things go back to the dollar, way they structure themselves financially as the global reserve currency, unless other things do, de-dollarize the United States from having the reserve currency, then we can talk about that. But as of right now, there's nothing that would really alarm me to be like, hey, yo, dollar is gonna collapse and it's gonna fail. I don't think so, because a lot of the debt that these countries owe need to be in US dollars. Unless, like I said, there could be some type of big turning point, new world order, whatever the case may be, where a dollar just has to take, second place, third place, fourth place instead of being king. So as of right now, I still think dollar is king, still the reserve currency. There are other currencies and fiat currencies that are better. There was someone in the group that had said, "Oh, what about Swiss franc or Swiss franc, however you pronounce it?" They actually are a better fiat currency. They didn't print as much. They have great job numbers. They have low inflation. They have great housing market. They have pretty much a well stable economy, and especially when it comes to their fiat reserve currency. So just because King Dollar is King Dollar doesn't mean it's the best fiat currency in the world. It's just that it's the most traded currency in the world. It's the one that they use for trade, imports, exports, etc. Hopefully you find this insightful. I will see you guys next month for August. So we're going to be going through our pair filtering process that I like to do with the group. If you are unfamiliar with how we like to process and pick pairs for the next month and how we go ahead with that, please go back and watch some of those Forex Fridays videos. We have a lot of examples of how we like to filter out these pairs. Peace.